Jay, what are the biggest ETF themes you see shaping up in 2026?
I think there's really three areas where investors are looking this year. The first is, what are some of the most compelling growth opportunities in the markets, whether it's getting targeted in specific themes or areas where we could see long-term structural growth? The second area is really looking at income. Where can you get income in an environment where we might see declining interest rates, yet we still have a lot of demographic trends like retirees that need to pull a certain amount of income from their portfolio? And then third, given uncertainty, given bouts of volatility that we've seen over the last few years, there's really a focus on diversification and how to add different types of assets to a portfolio that might behave differently from stocks and bonds.
Different from stocks and bonds, like digital assets, for example. I know last year you had a big year with the IBIT, so you were trading some of these cryptocurrencies. We're going to see more of that this year?
Absolutely.
Because they did crash last year, to a certain extent.
It was relatively flat. I mean, what we've seen is that a lot of the major financial platforms have now onboarded IBIT, making it available to their advisors to add to portfolios. What we believe is that something like IBIT could really play the role of a diversifier in a portfolio when used in small amounts. So for people that are looking at adding Bitcoin as a unique asset to their portfolio, anywhere from 1% to 2% of an allocation, it can really play a unique role, somewhat similar to how we've seen people use gold in the last few years as a diversifier in their portfolios.
What about liquid alternatives, ETFs? Everyone wants to find private market assets. I guess you do too.
So liquid alts are really looking at things like futures, stocks, bonds, where you can generate an alternative source of returns that's going to have a low correlation to stocks and bonds. We just brought out a new ETF, iAlt, which is doing multiple strategies all wrapped into one. So for the investor that has their stock and bond allocations and they want an alternative allocation, but they don't know how to size different alternatives or when to go into one alternative strategy like market neutral versus relative value in the macro space, iAlt takes care of all of that for you, that plug and play, easy solution for alternative exposure.
AI was a major theme last year, helped those Magnificent Seven, although those Magnificent Seven, now it might be Magnificent 2 or 3, I'm not sure where it is. What are your plans for AI? What's your outlook for AI in 2026?
We don't see it slowing down. In fact, if you look at a lot of the consumption of AI tokens, it suggests that a lot of people are adopting AI at almost an accelerating rate. You know, some stats show that AI usage 20x'd over the last 12 months. So AI is here to stay. We're seeing a bit of a broadening of the opportunity. It's not so much just about the Mag 7. We see opportunities across the digital infrastructure space, across LLMs and data, as well as applications and products that are adopting AI. So this is really a story about AI not going away, just really about a broadening of AI to more names across the entire value chain of this theme.
And then finally, speaking of themes, another big theme is thematic investing. So people want to invest in themes and then they want to rotate to another theme. So can you comment on that and your outlook for both thematic investing and all these rotations you're seeing in ETFs in 2026?
So the category of rotation strategies has really taken off in the last couple of years. We've seen it with DYNF, which is our factor rotation ETF with more than 30 billion in assets. We've seen it with THRO, which is our thematic rotation ETF. The idea behind these is that we live in dynamic markets. There's volatility, there's dispersion, things are changing really quickly. Strategies that can capture these changes very tactically could potentially generate really unique sources of alpha for a portfolio. The proof is in the pudding. Over the last 3 years, DYNF is first percentile in its category of large cap blend. So it has delivered tremendous returns. The cherry on top of all of this is because it's happening within an ETF, it can be very tax efficient. So people that are trying to be tactical on their own, maybe they get the calls right, but they have a tax bill at the end of the year. DYNF did not distribute a capital gain this year, nor did THRO. So we think this is a great way to be tactical and tax efficient.
All right, well, thanks for coming on and talking about it.
Thank you, Greg.